Okay, guys. Sit quietly. Huh? See, what is written in this red color? Claim of depreciation is equal to, meaning whenever you have some asset and that asset you are using for business or profession, the cost of that asset will be allowed out of your business income only in the form of depreciation. Why? Reason? See, the assets which are used in the business or profession, no, they are your capital assets. They are your capital assets. But their cost, you cannot take to capital gains when you will sell that asset. That time it will be allowed while calculating capital gains. No, not like that. If the asset is used for the purpose of business or profession, even if the assets are capital assets, their cost will be allowed under the head PGBP only, in the form of depreciation. You don't have any other option. You don't have any other option to claim that cost later on at the time of selling the asset to calculate the capital gains. No, that you cannot do. Claiming the cost in the form of depreciation is mandatory. Simple reason. Reason is, if that asset is helping you to earn business income, so cost of that asset should be allowed out of business income only. Understanding? So asset is helping you to earn which income? Because it is used for business or profession. So the cost of that asset should be allowed out of that income which you are earning by using this asset. Yes or no? So tell me, if the asset is used for business or profession, then the actual cost of this asset shall be mandatorily allowed as depreciation under the head PGBP only. No other option. Meaning you cannot claim this cost under the head capital gain. You have to claim this cost under the head PGBP only, in the form of what? In the form of depreciation. Will you remember this? Will you remember this? Okay. So this was one point. Actual cost of asset, until and unless allowed fully under the head PGBP, has to be claimed under the head PGBP only in the form of depreciation. Now see. Now you might have heard about amalgamation. So there are two companies, amalgamating company. The business of the amalgamating company is transferred to amalgamated company. Then you might have heard about demerger also. In the case of demerger, what happens? One big company is split into two parts. Some business of that company is split, and now that business is transferred to a new company known as resulting company. Yes or no? In case of succession also, sometimes what happens? Predecessor and successor also. Meaning that if a company is converted into LLP, a proprietary concern or a partnership firm is converted into company. Yes or no? So in these cases, a predecessor means the earlier person who was doing that business. Now that same business is done by some other person. In these cases, earlier I was doing the business on my name as a proprietor. Now that same business I am doing on the name of my company, because I have converted, I have created a company, and that same business is now done on the name of company. A partnership firm was there. The business of the partnership firm is converted into company. Earlier that same business was done by partnership firm. Now that same business is done by company. So there is a case of predecessor and successor also. Now in such cases, what happens now? See, during the previous year, for example, amalgamation is taking place. So this is your previous year 25, 26. In this year, for example, on 1st of December 2025, as on this date, this is the date of amalgamation. On this date, the amalgamation is taking place. So the entire business of X Limited is amalgamated with a company, and that company is Y Limited. So earlier that business was done by X Limited, and this year that same business is now continued by Y Limited. Now don't you think that the business of X Limited is continued by Y Limited? In this business, some assets will be there. Hello? In this business, some assets will be there. On those assets, who will claim depreciation? X Limited or Y Limited? Both will claim. Who will claim? Both will claim. But for that, you will have to first calculate the depreciation for this year, assuming as if no amalgamation has taken place. So you have to first assume as if there was no amalgamation, and first calculate the depreciation. And once you will calculate that depreciation, then you just have to apportion that depreciation between X Limited and Y Limited, amalgamating company and amalgamated company. And in what ratio you will apportion that depreciation? In the ratio of number of days for which the assets were used by X Limited and Y Limited during this previous year. See, depreciation you are not going to calculate for number of days, number of months. Depreciation will be calculated for the full year, assuming there was no amalgamation. But once you have calculated that depreciation, then you will just have to allocate that depreciation to each of the company. But this allocation, this apportionment will happen based on a ratio. And what is that ratio? The ratio of number of days used. Ratio of number of days for which the assets are used by each of the company. So for example, X Limited will use the assets from 1st April 2025 to 30th November 2025. This is the number of days for which the assets will be used by X Limited. Y Limited will use the assets from 1st December to 31st March 2026. Can you calculate the number of days? Calculate. December 31 days, January 31 days, February 28 days and March 31 days. How many days? How much? 121 days. Yes or no? 365 minus 121. 224 days. 244. 244 days. Right. So for 244 days, the assets will be used by X Limited. And for 121 days, the assets will be used by? In the same ratio, the depreciation has to be split. But this will be split only for those assets which were there since the beginning of the year till the end of the year in the business. What if some assets are purchased during the year? Possible or not? Even those assets will be used by X Limited and Y Limited. For example, asset is purchased, some asset is purchased on 9th of September 2025. Now this asset will be used from 9th September to 31st March. This asset will be used in the business from 9th September to 31st March. So this asset will be used for how many days? Will it be used for entire 365 days? No. So this asset is used in the business for from 9 September to 31st March. Out of that, 121 days the assets will be used by Y Limited. And for how many days this asset will be used by X Limited? 9 September to 30th November. So September how many days? Leave 8 days. So 22 days of September. October 31 days. November 30 days. How many days? 83 days. This asset will be used by X Limited. Now whatever depreciation on this asset you have calculated, that depreciation you have to apportion between X and Y in the ratio of 83:121. Understanding or not? But what if that same asset was purchased on 9th of October? Then how many days? Tell me. 8 days of October you remove. Then 23 days in October and 30 days of November. How many days? 53 days. This asset will be used by X Limited, and 121 days the asset will be used by Y Limited. So total number of days for which the asset is used is 121 plus 53. 121 plus 53 will be 1. So 53 into 174, 53 divided by 174, depreciation into 53 divided by 174 will be apportioned to X Limited, and depreciation into 121 divided by 174 will be apportioned to, but whatever depreciation you have calculated on this asset. But don't you think for this asset the depreciation will be calculated for the full year but at half rate? Why half rate? Asset is purchased and put to use after my birthday, meaning less than 180. But those assets which are put to use for 180 days or more, for those assets full year depreciation will be calculated, and that depreciation will also be apportioned based on the number of days for which the asset was used. So in the case of amalgamation you are going to do this thing. In the case of demerger also you are going to do this thing. Yes or no? In the case of succession you are going to do this thing only. So in such cases what happens? Assets are used in the business during the same previous year by more than one assessees. So in that particular scenario, both the assessees are entitled to claim depreciation, but the depreciation will be calculated for the full year assuming amalgamation, demerger, succession, etc. has not taken place. Forget that this type of incidents has happened. What are you going to do? You are going to calculate the depreciation assuming no amalgamation has taken place. Like the same way in which we have been calculating so far. Now that depreciation which we have calculated, just you have to split that depreciation between amalgamating company and amalgamated company, demerged company and resulting company, successor and predecessor, in the ratio of number of days for which the asset was used in the business by each of those assessees. Will you remember? Will you remember? Now should I twist this a little bit? Tell me, if this same asset was purchased on February 11th, 2026, asset is purchased here. Will you calculate the depreciation on the asset? Yes, for the full year, but at half rate. Now, if you split this depreciation, you are gone. Why? Because in the business, the asset was purchased after the amalgamation by the amalgamated company, and that asset was never used in the business by amalgamating company X Limited. So will you allocate any depreciation to X Limited, or the entire depreciation on this asset will be claimed by Y Limited? Entire depreciation by Y Limited. Yes or no? Everyone? Sure you will remember this? Okay, this is the end. of this particular part. Now last part of depreciation, unabsorbed depreciation. Which depreciation? See, how do you calculate business income? Do you know how to calculate business income? PGBP income. How to calculate? Income minus expenses. So first of all, you will take what? Business incomes. You are going to take what? Business income. And from those business incomes, you are going to reduce business expenses. Now for example, the business incomes were 10 lakhs. Business incomes were, and the business expenses were 8 lakhs. Possible or not? So how much is the profit? Now from this 2 lakh, what is going to happen? Less depreciation, which you have calculated under section 32. By the way, let me tell you very clearly that depreciation is not an expense. Do you know that? Depreciation is not an expense. It is an allowance of the capital expenditure which you had incurred earlier. What you reduce from here as business expense? The normal revenue expenses on business. Normal revenue expenses of the business. These are the business incomes and these are the normal revenue expenses of the business, like purchase of stock in trade, rent, etc. you have paid. Yes or no? Then electricity charges, then different types of taxes in the business, advertisement charges, okay. All the expenses which are related to business, which are of revenue nature, they are first reduced to calculate your profit. And once the profit is calculated, out of this profit you are given a separate deduction for depreciation under section 32. And that depreciation is never an expense that is allowed separately like this, because that is an allowance of capital expenditure incurred for the purpose of business or profession. Capital expenditure incurred for the purpose of business or profession, meaning actual cost of the asset, which was a capital expenditure, is allowed in small parts in the form of depreciation. That you claim later on after claiming all the expenses of the business. Now, for example, the depreciation will be claimed. It will be claimed as per section 32. So first you will have to calculate that depreciation, normal depreciation, additional depreciation, terminal depreciation, all the depreciations you are going to calculate, and that depreciation you are going to reduce from here. Okay. Now tell me, let's take an example. If the depreciation was only 1,40,000, how much was the depreciation? So how much is the balance amount? 60,000. Can I say this is the profit of my business? Yes or no? This is the profit of my business. This is my taxable PGBP income. What is this, guys? Taxable PGBP income. Right? No? Now let me take one more example for you now. Now for example, my business income was 10 lakhs. How much was my business income? My business expenses are 8 lakhs. So what is my profit? 2 lakh is my profit. Now can I say this time your depreciation is 2,40,000? Possible or not possible? Did you calculate the depreciation according to your wish or as per section 32? The law says you followed the provisions of law, you followed the provisions of section 32 and you calculated depreciation. The amount of depreciation came to 2,40,000. Now do you have enough profits to absorb this depreciation? So negative 40 will come. Negative, what will you call this 40? Will you call it business loss? Will you say that it is my business loss? If you will say that this is your business loss, then your answer is wrong. This is your unabsorbed depreciation. Out of 2,40,000 of depreciation for this year, 40,000 depreciation could not be absorbed in this year's profit because there were no profits or profits were insufficient. When will you have business loss, you know? 10 lakh minus 11 lakh. Then you will have business loss of 1 lakh. You cannot call this 40,000 as business loss because your business is not giving you a loss. Business is giving you a profit. Profit of 2 lakhs. This year our business is not giving you a loss. There is no business loss. Business is having a profit. But then why negative 40? That negative 40 is because 2 lakh profit for this year is not sufficient to absorb this year's entire depreciation. So whatever depreciation which remains because of unavailability of profits or lower profits, yes or no? That depreciation is nothing but unabsorbed depreciation. You cannot call this amount business loss. You will have to call this amount unabsorbed depreciation. How you will adjust this unabsorbed depreciation is given in section 32 subsection 2. 32 subsection 2. Sir, can you have a business loss? Can you have a business loss? When will you have business loss? Business income was 10 lakhs and your business expenses were 11 lakhs. Now instead of having a positive amount, you will have a negative amount here. This will be negative 1 lakh. Yes or no? And for your depreciation this year was 2 lakh 40. Now you will have total negative amount of 3 lakh 40. Out of that 1 lakh will be your business loss. 1 lakh will be your business loss and 2,40,000 will be your unabsorbed depreciation. Now what you do with business loss is different. How you adjust your business losses, how you set off your business losses, the provisions are different, and what you do with the unabsorbed depreciation, the provisions are different. What will you do with unabsorbed depreciation is given in 32(2). And what are you going to do with business loss is given in section 70, 71 and 72. Hello? Understanding? So for business loss, set off and carry forward is given under section 70, 71 and 72. But for unabsorbed depreciation, its set off and carry forward will be done as per section 32(2). Now what is business loss? What is unabsorbed depreciation? That you came to know. You are going to apply these provisions on 1 lakh. And you are going to apply these provisions for 2,40,000. And you are going to apply these provisions for 40,000. Getting my point? This 40,000, color, which color? Pink color. Will be adjusted as per 32(2). So this will be adjusted as per 32(2). And for this 1 lakh, you cannot apply 32(2) because that 1 lakh is your business loss. For that, you are supposed to follow section 70, 71 and 72. Now see how you will adjust business loss. Section 70, 71 and 72. Section 70 says that this year's business loss can be adjusted in PGBP head and under the PGBP head against the profits of any other business. So first the business loss will be adjusted against profit of any other business. If profit of other businesses are not enough, not sufficient, then your business loss can be adjusted against income of any other head as per section 71, except salary. Except. So first, try to adjust your business loss from profit of any other business under the same head. If not possible, then try to adjust that business loss against income of other heads except salary. 70, 71 done. Still your business loss cannot be adjusted. Still your business loss cannot be adjusted in this year. Then carry forward that business loss to subsequent year. And in the subsequent year, after carry forward, your business loss will be adjusted from business income only of subsequent years. So after the carry forward, the business loss will be set off against any income of the future? No. It will be adjusted only against business incomes in the future. Sir, what if I don't have the business income in the future? No problem. Carry forward to the next year. Next year you will have business income. No. From there you can set off. Sir, what if in the next year also I don't have a business income then? You can carry forward to the third year. Likewise, you can carry forward for a maximum 8 years. This you can do with business loss. 70, 71 and 72. Got it, sir? But what about unabsorbed depreciation? How will you set off that unabsorbed depreciation? You cannot apply the provisions of 70, 71 and 72 because specifically section 32(2) only says that how to set off this unabsorbed depreciation. Now 32(2) says that this year's unabsorbed depreciation can be adjusted against any income of this year except salary. Meaning unabsorbed depreciation of one business can be adjusted from profit of other business. If not, then it can be set off against income of other heads also except salary. But still it cannot be adjusted in this year. Then you can carry forward the unabsorbed depreciation and in the future it will be set off against any income except salary. After carry forward, the business income will be set off only against, business losses can be set off only against business incomes. But after carry forward, unabsorbed depreciation can be set off against any income except salary. Sir, what if in the future I don't have any other income then? No problem, carry forward to the next year. Next year you will have any income except salary. From that you can set off. Sir, what if in the next year also I don't have any income then? I only have salary income then? Then carry forward to the next year. Likewise, you can carry forward your unabsorbed depreciation for indefinite period. Carry forward of business loss and carry forward of unabsorbed depreciation. Same or different? Different. Business loss after carry forward can be set off only against business income. Carry forward is possible only for maximum 8 years. And unabsorbed depreciation after carry forward can be set off against any income except salary. Hello? And it can be carried forward for indefinite period. Will you remember this? Hello, sir? Will you remember this? First you will take your business incomes minus business expenses. Minus business expenses. Then you will get profit or loss. Profit is there, no problem. Loss is there, set off that business loss as per 70, 71 and 72. How will you set off? First, set off the business loss within the head against the profit of any other business. If not possible, then set off that loss in this year only against other heads except salary. If still not possible, then this year the loss cannot be set off. Carry forward to subsequent year. In the subsequent year, after the carry forward, the business loss will be set off only against business incomes of the future. Yes or no? Maximum carry forward for 8 years. That's it. Done, sir? Now tell me, what if business profits are there? Sorry, no business profits are there. or business profits are there, but are not sufficient to set off, to adjust this year's depreciation. Then some depreciation will remain, which is unabsorbed during this year, because this year's profits were not sufficient to absorb this year's depreciation. Yes or no? Then whatever unabsorbed depreciation is there will be adjusted as per section 32(2). How will you set off? This year's unabsorbed depreciation of any business can be set off against income of any other business, profit of any other business. If not possible, then income of any other head except salary, and still cannot be adjusted, then carry forward. After carry forward, in the future, from which income it will be adjusted? Any income of the future except salary. Any income of the future except, and that carry forward is possible for how many years? Indefinite period. This is for unabsorbed depreciation. Will you remember this? Sure, sir. Paid in, sir. See, that same thing I have done. Okay, no? Same examples also I have taken. Okay? Now see, can you see this additional depreciation? If you don't follow 115 BSc, if you follow 115 BSc, normal depreciation you can claim under both the regime, but additional depreciation you can claim only under the optional tax regime. You cannot claim under default tax regime. What? Additional depreciation. I have already told you this. Yes or no? So, this is the end of your depreciation. Finally, depreciation is over. Section 32 is over. First of all, which chapter we are doing? Which chapter we are doing? PGBP. In PGBP, how many parts are there? 5 parts. First part, basics, will tell you which incomes are taxable under this head. Let you know which incomes are taxable. Income derived from business or profession. Main business income, incidental business incomes, incomes specifically charged under the head PGBP. Yes or no? Specific charge. Do you remember those compensation, payments on termination or modification of managing agent agreement, then agency contract, vesting of management of any property or asset to the government or any government authority, government agency, then termination or modification of any business contract, then export incentives, then perquisites in the course of business or profession. Few more incomes were there. Non-compete fees, non-disclosure fees. Yes or no? 3-4 more incomes are there. Those 3-4 incomes we are going to see. Few incomes, 1-2 income we are going to see under the head PGBP. Few incomes we are going to see in IFOS, capital gain. Yes or no? So those incomes are taxable. Then sometimes the deemed PGBP income is also taxable as per section 41. Do you know any deemed PGBP income? Do you know any deemed PGBP income? Yes, I have already taught one deemed PGBP income. Balancing charge. Yesterday only. Balancing charge in the case of those assets which are acquired by the assessees engaged in power business, on which the depreciation is claimed on SLM basis under 32(1)(1). If you sell those assets over and above their WDV, then whatever excess recovery you have done over and above WDV to the extent of depreciation will be deemed to be PGBP income. 41(2), that is balancing charge. So, main business income, incidental business income, incomes taxable because of specific charge, deemed PGBP incomes, these incomes are taxable under this head. Now, from these incomes, what deductions you are going to get? 30, 31, 32. We have already completed. 30 is rent, rates and taxes, repairs and insurance premium of any building used for the purpose of business or profession. 31, repairs and insurance premium of plant and machinery or furniture used for the purpose of business. 32, depreciation. 32, meaning 30, 31 and 32, these sections are saying that these items you can reduce out of your business income. These items are allowed as a deduction out of your business income to calculate your business profits. Understanding or not? Now apart from that, which items you can reduce? So you will come to section 35 now. Which section? You can reduce this amount also, you can reduce this amount also. This expenditure will also be allowed as a deduction from your business income, and these donations are also allowed as a deduction from your business income. Now pay attention. Section 35 has how many parts? 2 parts. Section 35 has how many parts? 2 parts. So as per section 35, you can claim the deduction for expenditure. Now this expenditure you have incurred on what? Expenditure incurred on scientific research. Scientific research which is related to what? Business of the assessee. So assessee, are you doing any business? Yes. So any scientific research related to your business, on that scientific research you are incurring any expenditure. That expenditure also we are going to allow you as a deduction. Full expenditure you can claim as a deduction. Now what type of expenditure you can incur for scientific research? 2 types. Revenue expenditure and capital expenditure. Revenue means recurring expenses on scientific research, like research material etc. you are buying. So cost of research material and all. The staff of research staff, you will give them salary etc. What is that? That is a recurring nature expense which you incur in the scientific research. Yes or no? So that revenue expenditure which you are incurring for scientific research, that revenue expenditure we are going to allow. But apart from revenue expenditure, you can also incur capital expenditure on scientific research. Capital expenditure means buying assets. Buying. That is capital expenditure. Whenever I talk capital expenditure under PGBP head, understand I am talking about assets. Any capital expenditure in the business is what? I am buying assets in the business. So what type of assets you can buy? You can buy any asset for scientific research other than land. Other than cost of land we don't allow under PGBP head. I have told you earlier. Hello? Land you have directly thrown out and it is there in capital gains. So other than the cost of land, any asset you buy for what? Scientific research. So any capital expenditure, meaning any actual cost of that asset, will be allowed as a deduction fully, and no need to claim that cost in the form of depreciation. That cost we are going to allow you fully. Cost of those assets which you have acquired for the purpose of scientific research, which is related to your business or profession. Yes or no? So now we are going to elaborate this thing. First of all, which expenditure? Come on, tell me. Expenditure on scientific research. Expenditure. Expenditure on what? Scientific research. And this scientific research must be related to business of the neighbor of the assessee. Now any scientific research which is related to the business of the assessee, on that scientific research assessee has incurred some expenditure. What type of expenditure, sir? Either revenue expenditure or capital expenditure. Sir, capital expenditure means what? Actual cost of assets. Which assets? All assets. Which assets? All assets other than. So tell me, all the assets are eligible but land is not eligible. Cost of all the assets you can claim as deduction, but cost of land you cannot claim as a deduction. Revenue expenditure will be allowed as a deduction. Full revenue expenditure will be allowed as a deduction. Full capital expenditure will also be allowed as a deduction in the year in which such expenditure is incurred. So, revenue expenditure incurred in this year, capital expenditure incurred in this year will be allowed as a deduction in this year. Out of this year's business income, claim the deduction. That's it. How much expenditure will be allowed? Full expenditure. Revenue also fully allowed. Capital expenditure also fully allowed. Cost of asset also fully allowed. Will you remember this? Sir, sometimes revenue and capital expenditure are incurred prior to starting the business also. Don't you think that I'm starting a business, before even starting the business, I might have started scientific research? Sometimes in certain types of business, what happens? Before even the business operations are commenced, before even the business is commenced, before that only, the assessee starts conducting scientific research. So on that scientific research, which was conducted for the business, but it was conducted prior to commencement of business. On that scientific research also you might have incurred some revenue expenditure or capital expenditure. Even those revenue or capital expenditure we are going to allow. But we are going to allow them in which year? In the year in which the business is commenced, assuming that these expenditure are incurred in the year of commencement. So out of the business income of the year in which the business is commenced, you can claim the deduction for revenue and capital expenditure on what? Scientific research which you have incurred prior to commencement of business. Prior to means how much prior to? 15 years back, 20 years back, 100 years back? No. The date of commencement of business, immediately prior to that, within 3 years. So within 3 years, immediately prior to commencement of business, any revenue expenditure is incurred, any capital expenditure is incurred other than cost of land will also be allowed as a deduction. But it will be allowed as a deduction in the year of commencement. In the year of. So now can I split revenue and capital expenditure into two parts? Some revenue expenditure is incurred prior to commencement, known as pre-commencement. Pre-commencement. Pre-commencement within how much time? Within 3 years, immediately preceding to commencement of business. This will be allowed as a deduction. This will be allowed as a deduction under section 35. When it will be allowed? When it will be allowed? In the previous year. In the previous year in which business is commenced. Assuming that this expenditure was incurred in the year of commencement, in the year of commencement it will be allowed as a deduction. Will you remember? Okay. Tell me. Now, can I say post-commencement expenditure? Post-commencement any revenue expenditure will also be allowed as deduction under section 35. In which year? In the previous year in which it is incurred. So will this discussion be applicable only for revenue expenditure or for capital expenditure also? Even for capital expenditure, the same discussion is applicable. So can I copy paste any capital expenditure? What did I say? Any capital expenditure other than cost of land, other than cost of incurred for the purpose of scientific research, incurred for the purpose of scientific research will also be allowed as a deduction other than the cost of land. If it was incurred prior to commencement, then within 3 years immediately preceding to date of commencement, whatever capital expenditure are incurred other than cost of land will be allowed as a deduction in the year of commencement. And any capital expenditure, any asset acquired after the commencement, its entire cost will also be allowed under section 35 in the year in which it is incurred. Understanding or not? This is the one part which is over. One part of section 35 got over. So, what did I talk about? Expenditure on scientific research related to the business, business of the assessee. Okay, no? That expenditure on this scientific research will be allowed, whether the expenditure is revenue expenditure or it is a capital expenditure other than cost of land. Yes or no? Pre-commencement will also be allowed. Post-commencement will also be allowed. Pre-commencement will be allowed if it was incurred within 3 years immediately preceding to date of commencement. But remember, for this now, there is a requirement that this pre-commencement capital expenditure must be capitalized. Must be capitalized in books of accounts. In books of accounts, meaning the assets which you have acquired prior to commencement must be shown in your balance sheet in the year in which the business is commenced, meaning the assets are capitalized in your books. So if you have capitalized the assets in your books, you have shown these assets in the balance sheet for the year in which the business is commenced, then only the cost of those assets will be allowed. Understanding? Sir, here I'm talking only about capital expenditures now. Now whatever discussion I'm going to do, that entire discussion is only for capital expenditure. Very important discussion, huh? Okay. Now first very important point. Proviso to section 43(1) will also apply here. Do you remember proviso to 43(1)? Actual cost of the asset you are going to claim under section 35. If that asset is used for scientific research, so entire actual cost of that asset you are going to claim under section 35. But that actual cost will not include the payment which you have done in a day to a person otherwise than prescribed modes, if that payment is more than 10,000. Do you remember that? So ignore that actual cost which is paid in a day to a person and the amount was more than 10,000. If you have paid that amount of actual cost by way of any modes other than prescribed modes, that actual cost will not be taken as actual cost. And if that is not actual cost, that cannot be claimed under section 35 also. Proviso to 43(1) will be applicable here. Yes or no? Then next point. Depreciation on above assets or deduction of above capital expenditure, meaning above actual cost. Yes or no? Shall be available or shall not be available? Deduction of above capital expenditure under other sections. Under other sections. Will be available or will not be available? Not available. Why not available? Bloody, if you're taking the deduction of this cost under section 35, now do you expect us to give the cost as a deduction under other sections also? As a deduction in the form of depreciation also? No, don't come to us. We are not going to give you the cost as a deduction under other sections. We are not going to give you this cost as a deduction in the form of depreciation. So the assets whose cost is allowed under section 35, on those assets you cannot claim depreciation. The cost of that asset you cannot claim as a deduction under other provisions, because entire cost we are allowing you under section 35. Claim it here, no? Why are you claiming depreciation on that? Why are you claiming that cost under other sections also again? If that is done, double deduction will be available, no? So take deduction once, not again and again for the same cost. Got it, sir? Hello? Now, next thing, very important. Land and building acquired. For what? For scientific research. Can I say this is the capital expenditure on scientific research? Hello? So whatever capital expenditure you have incurred, meaning actual cost of this asset will be allowed under section 35, no? This entire actual cost will be allowed under section 35, no? Out of the actual cost, you will have to eliminate the cost of land, because that is not allowed. If the land and building both are purchased together as a single asset, yes or no? So from that total cost, you have to separate the value of land that is not allowed under section 35. Only the actual cost of the building can be claimed under this section. Yes or no? So this actual cost you are supposed to split. Actual cost to the extent of FMV of land will be ignored, and the balance amount, which will be equal to actual cost of building, only that will be allowed under section 35. Okay, this is another important point. Next important point, very important point, very important point. Now see, this is your business, okay? Pay attention, huh? Pay attention, this is your business. Now in this business, no, this is an area. Okay, for example, this is your factory. In this factory, no, here the normal operations are going on, normal production and everything is going on in this area. But in this area, no, this is a laboratory area. Here scientific research is going on. So there was one asset. Okay. This asset you have acquired, and where you are using this asset? In your business, in the scientific research. Yes or no? Now tell me, what was the cost of this asset? Example, 2 lakh rupees. How much the cost of this asset? Don't you think that this entire 2 lakh was allowed under section 35? You must have claimed the deduction of this 2 lakh under section 35. Why? Because this asset you have acquired and you have started using this asset in your business, in your scientific research. So since this asset is there in your business, it is there in the scientific research. You are using that asset in the scientific research in your business. So the cost of this asset 2 lakh rupees is allowed fully under section 35. Yes or no? Now pay attention. Now this same asset. Now this, if you no more, this same asset is no more needed in the scientific research. What are you going to do? You are going to throw away this asset. Either you are going to sell this asset. In that case, the asset will go out of business. So I don't want to sell this asset. But there is a requirement of this type of asset in my normal operations in the business. Possible or not? So I will start using this same asset in my business only in other normal operations. Possible or not? Has the asset left my business or it is still there with me? It is still there in my business, but now this asset is taken out of scientific research and now this asset is used for the purpose of my business, normal operations of my business. Yes or no? Now the moment this asset will come to the normal operations, I will have to add this asset in the block. Because whenever I bring any asset in the business, I have to bring that asset in the block. So will I add this asset in the block? Yes. Why not? If I am bringing this asset in my business, normal operation, I will have to add this asset in the block. Earlier it was not there in the block. Why? Because it was being used for scientific research. Its entire cost was allowed there. Yes or no? Now I am bringing that asset in my business, in my normal operations. I will have to show that asset as a part of my block now. I cannot keep that asset individually because there is no individuality of the asset. I keep all the assets in the business in a block. So I will have to put this asset also in the block. So will this asset be added to my block? Yes or no? At what cost? Nil. Because its entire cost has already been allowed under section 35. Entire 2 lakh rupees cost we have allowed the moment you brought this asset in your business in the scientific research. At that time only we have allowed 2 lakh rupees. Entire cost of this asset we have already allowed under section 35. But after use of that asset in the scientific research, now you will start using that asset for other operations in your business. At that time when you will add this asset in that block, we are not going to take the cost as 2 lakh. We are going to take the cost as nil. Explanation number 1 to section 43(1) which I left at that time is this only. What will be the cost of this asset? Actual cost of this asset in your business when you bring this asset from your scientific research to the normal operations in the business. What will be the cost of this asset? Nil. Because its entire cost has already been claimed under section 35. So when this will be brought in the normal operations, so it will be added to block. And when it is added to block, at that time actual cost of this asset will be taken as nil. This was explanation number 1 to section 43(1). Always take the actual cost of this asset as nil whenever you bring this asset in your business from your scientific research. So from your business, from operations, scientific research operations, it is transferred in other operations of your business. At that time it will be added to the block of those assets which are used in those operations. Yes or no? So your assets which are used in normal operations are there in the block. So with those assets, this asset will also be added. Now this asset will also form part of block. But at what cost? At the time of adding this asset in the block, what amount of cost, actual cost you are going to take as addition? Nil. Because its entire cost we have allowed as a deduction under section 35. Will you remember this? Sure. Now see, same example. Same to same example. Yes or no? Copy and paste. Now what I am going to change, you please see that. I am going to change something over here. Now see, where is the asset right now? In my business. But it is being used in. So in spite of having that asset, keeping that asset in my business, in other operations, now from here only, I am selling the asset, transferring the asset. Is it possible? Transfer of such asset. Transfer means sale, scrap, salvage, anything. Yes or no? Now without the asset being used in my business for other operations, from scientific research only, it is transferred. Possible or not? Possible or not? Will I get any amount? Will I get any amount? That amount or the cost of that asset allowed under section 35, whichever is lower, will be deemed to be my PGBP income. Because the cost of this asset we have allowed under PGBP, so any recovery out of that cost will be your PGBP income. So if the cost was 2 lakhs, we have allowed 2 lakh under the head PGBP. So any recovery against that 2 lakh has to be your PGBP, deemed PGBP. Tell me, can you sell this asset for 1,20,000? Hello? Can you sell this asset for 1,20,000? Meaning out of 2 lakhs, which we have allowed under the head PGBP, you have recovered 1,20,000. So how much should have been your cost? 80. You should have claimed under the head PGBP, how much? 80. But how much you have claimed? 2 lakh. How much extra you have claimed? 1,20,000. Consider that 1,20,000 as your deemed PGBP income. Common sense. What if you sell that asset for 1,90,000? Then 2 lakh or 1,90,000, whichever is lower. 1,90,000 will be your deemed PGBP income, because out of 2 lakh you have already recovered 1,90,000. So that 1,90,000 should be treated as your deemed PGBP income, because that 1,90,000 is recovered out of this 2 lakh only, which we have allowed under the head PGBP. What if you are selling that same asset for 2,40,000? Will you consider the 2,40,000 as your deemed PGBP? Or only 2 lakhs? The cost which we have allowed under PGBP was only 2 lakhs. So the recovery to the extent of that cost will only be treated as your deemed PGBP. Any recovery over and above that will be your capital gains. Understanding? But this you are going to do only if the asset is transferred directly from scientific research without being used for other operations in the business. What if the asset is used in other operation? That asset is still there in my business. That asset is not leaving my business. That asset is not leaving me. That asset is still there in my business. Now that will come to the block. Now that will come to the block. Getting my point? And in the block, at what cost it will be added? Nil. And what if this asset is now sold? It will be sold as a part of block. Whatever recovery will happen will be adjusted from the value of the block. Understanding? So that time I am not supposed to do deemed PGBP income. Deemed PGBP income will come only in this case. The diagram is made, no, it is made to, make you understand that bloody what is happening. In my business, scientific research is there. In that scientific research operations, the asset is used. Now, if I take that asset and still keep that asset in my business, in other operations, then I am not in this case, I am in this case. So when I will bring that asset in the other operations in my business, this asset will be added to the block. But added at what cost? Nil. And if that asset is sold, then it will be sold from the block only. And if it is sold from the block, deletions, money recovered will be adjusted out of the value of the block. To that extent, the depreciation will not be allowed. No need to apply any mind over there. But what if without being used in the other operations of the business, it was being used in the scientific research, from there only it was transferred. So now the asset is leaving me. Now the asset is leaving my business. But not after coming in the block directly. So at that time, whatever recovery will happen, to the extent of cost of this asset, which we have already allowed under section 35, to the extent of that cost, whatever recovery will be there will be your deemed PGBP income. Section 41, subsection 3. Deemed PGBP income, section 41, two things we have done. 41.2, balancing charge. 41.3, this amount. If you have any of this type of recovery, always consider this amount as your business income. This will be deemed to be your business income as per section 41. Will you remember this? So transfer such asset. At that time, what are you going to do? A actual cost allowed under section 35, or B amount recovered on what? Transfer, whichever is lower. So lower of A and B is equal to what? Is equal to deemed PGBP income under section 41(3). Yes or no? And any recovery, what did I say? Any recovery over and above the actual cost allowed under section 35, any recovery over and above this actual cost, that recovery will be treated as capital gains. That recovery will be treated as capital gain. 3 examples I gave. What is the cost allowed? What was the cost of the asset? 2 lakhs. Allowed under section 35. So A, 2 lakhs rupees. A, 2 lakh rupees. Now if I sell the asset for 1,20,000. So what is the amount recovered? 1,20,000 or 2 lakh, whichever is lower. 1,20,000 will be deemed PGBP income. No capital gain will arise. Why? Because amount recovered is not above cost, within the limit of that cost. So entire amount of recovery will be taxable as your PGBP income. Capital gain will not arise. What if the amount recovered on sale was 1,80,000? So 2 lakh or 1,80,000, whichever is lower. 2 lakh or 1,80,000, whichever is lower. 1,80,000 will be your deemed PGBP income. No capital gain arises here. What if the amount recovered on sale was 2,30,000? 2 lakh or 2,30,000, whichever is lower. 2 lakh will be your deemed PGBP income. Any recovery over and above the cost? How much? That will be your capital gain. That's it. Easy, difficult? Easy, no? So this is one part of your section 35 which we have completed. Expenditure on scientific research, whether revenue or capital expenditure will be fully allowed. Revenue expenditure, pre-commencement also will be allowed, post-commencement will also be allowed. Pre-commencement within 3 years, immediately preceding to date of commencement, and post-commencement any time after the commencement. Yes or no? Pre-commencement expenditure will be allowed in the year in which the business is commenced, and post-commencement will be allowed in the year in which it is incurred. Capital expenditure also same thing. Yes or no? But all the capital expenditure, meaning cost of all the assets, can be claimed as a deduction, provided it is the cost of all assets other than land. Even pre-commencement will be allowed, post-commencement will be allowed. Done, sir? But while taking the deduction for capital expenditure, you are supposed to remember few things. Number 1, any capital expenditure, meaning cost of asset, paid in a day to a person more than 10,000 other than prescribed mode, will not be treated as capital expenditure, will not be treated as actual cost, will not be allowed under section 35. Number 2, any capital expenditure which is already allowed under section 35 cannot be claimed in the form of depreciation, cannot be claimed under any other provisions of Income Tax Act, because it is already claimed under section 35. Yes or no? Land and building, both are purchased through a single agreement. Then cost of land separate will not be allowed as a deduction. Cost of building will be allowed. Yes or no? Now if the asset which was purchased for scientific research, you start using that asset for other operations in your business, then that asset will be added to the block. Yes or no? At what cost? Nil. And if that asset is sold, then it will be sold from the block. Any amount recovered on the sale of that asset from the block will be adjusted from the value of the block itself. Yes or no? Now, if that asset, without being used for any other operations in the business, sold from the scientific research directly, then amount recovered or actual cost of that asset allowed under section 35, whichever is lower, will be your deemed PGBP income. And any recovery over and above the cost will be treated as capital gain. This is what we have done so far. Okay. Now, the second part of this chapter, second part of this section talks about donations. Talks about what? Donations means contributions. Now, donations to whom? Assessee will make donations. See, usually, whenever you make donations, you don't get deduction under PGBP, because donations are not your business expenses. But if you will make this type of donation, we will consider this type of donation as your business expense. Whether it is related to your business or not will not make any difference. We just want you to make this type of donation. We will consider this as an expenditure of your business, and we will allow you this donation also under the head PGBP. But for that, the donation must be only this donation which I am telling you. Any other donation will not be allowed. Only this donation will be allowed as a deduction from your business income. So donation to whom? Approved institutions, organizations, associations, colleges, universities, etc. See, any institution, organization, association, colleges, universities, etc., they must be approved. So are you going to make the donation to any institution or only the approved institutions? And this donation is made to approved institution for conducting what? Scientific research or statistical research or research in social sciences. 3 types of research. Assessee himself is not conducting this research. No. Forget it. Who is conducting this research? This approved institution. This approved institution is conducting scientific research, statistical research, or research in social sciences. Now, on their research, they will have to spend money. So, who will give money to them for scientific research? There are approved institutions, there are approved organizations, there are approved associations, colleges, universities, etc. They are conducting research. So for conducting certain type of research, they are approved by the government. That okay, you can do this type of research. Best example is ISRO. Have you heard about ISRO? Indian Space Research Organization. So what this organization does? What this ISRO does? ISRO is an approved organization. It has been given the approval to conduct scientific research related to space research. So who will give money to them to conduct that research? Government. Have you heard about Bhabha Atomic Research Center? BARC. That is in Mumbai. So all the nuclear researches happens there. That is a scientific research going on there. So Bhabha Atomic Research Center. There was a great nuclear scientist in India, Mr. Homi Bhabha. Mr. Homi Bhabha. On the name of that Homi Bhabha, that research center is there. Bhabha Atomic Research Center, BARC. That is in Mumbai. In Mumbai, there is an area known as Chembur. In that area, this Bhabha Atomic Research Center is there. What research is conducted there? Atomic research, nuclear research is going on. So that organization, that institution is approved by the government to conduct that research. So who will give them money to conduct that research? Government. ISRO, BARC, yes or no? These are few organized. IITs, have you heard about IIT? IITs also conduct researches. The professors who are teaching there to the students are very sharp, and the students, professor and students together, they come together and they undertake different scientific research projects, robotics, this, that, what not. So to conduct the researches at universities, at colleges also, these type of researches are promoted. So the government wants to promote all these type of researches. Not just scientific research, research in social sciences also. Statistical research also. You might have heard about Tata Institute of Social Sciences, TISS. Tata Institute of Social Sciences. They conduct research in social sciences. So who gives them money? Who gives them funding to do all such research? Who has given them the approval? Government has approved these organizations, institutions, associations, colleges, universities, that you are approved to conduct certain type of scientific research, statistical research, or research in social sciences based on certain conditions. So if these institutions or organizations are satisfying certain conditions, based on the satisfaction of those conditions, they are approved to conduct these type of researches. And to conduct these type of researches, the government usually gives them funding. But sometimes government also lack money. Sometimes even the government does not have enough money to fund their research programs and all. Yes or no? So the government wants the businessmen to help such entities. Let's see, we are funding. So if you could also donate some money out of your business income, and businessmen are usually wealthy people, so you can expect them to donate here. So as a businessman, if you are donating to these institutions, whatever donation made by you to these type of institution for conducting their scientific research, statistical research, research in social science, whether these researches are related to your business or not, entire amount donated by you will also be treated as your business expense, will be allowed as a deduction. 100% amount will be allowed as a deduction. Earlier, no. If I'm not wrong, 5 years back, yes. 125%. 150%, 175%, 200% of the amount donated used to be allowed under this section. If you donate 5 rupees, you will get the deduction of 10 rupees. So from your pocket only 5 rupees will go, but from your business income you can reduce 10 rupees as a deduction. For certain donations it was 200%, for certain donations it was 125%. For certain donations it was 175%. But that is past. Earlier the government wanted the businessmen to come forward and donate these amounts, because government had very limited funds to donate to them. So the government were promoting the businessmen to donate. So when you will be motivated? You will be motivated if you are given more deduction. So if you donate 1000 rupees, we will give you 1500. So donate only 1000, reduce 1500 from your business income. Donate only 1000 rupees and reduce 2000 rupees as a deduction from your business income. This was the benefit which was earlier given. But 5 years back, amendment came and everything was made 100%. Now whatever you donate, actually that much amount will be allowed as a deduction. Understanding? So donation should be made to approved. Remember, at the time when you are making the donation, no, at that time the institution must be approved. Because donation to approved institution, at the time of making the donation, the institution should be approved. And to those institutions, associations, organizations, colleges, universities, you are making donation for what? For conducting their scientific research, for conducting their statistical research, for conducting their research in social sciences, whether that research is related to your business or not. Whatever amount you are going to donate for these reasons, for these type of institutions, that entire donation will be allowed as a deduction from your business income as your business expense. That's it. Section 35 over. But remember, the institution must be approved at the time of making the donation. Now, do you know that these institutions are given the approval based on certain conditions? Now, if they fail to fulfill certain condition, no, their approval can be cancelled also. So the government will cancel their approval. So what happened? No, when you donated, at that time the institution was approved during the previous year. But when you entered in the assessment year, when you filed your return, in your return you claim this deduction, saying that you have given the donation to approved institution. But at that time, during the assessment year, when you were claiming the deduction, at that time approval was cancelled. So assessing officer is saying, we are not going to give you any deduction. Why? Because you are claiming the deduction for a donation which is made to an institution which is right now not approved. At the time when you are claiming the deduction during the assessment year, in your return, at that time this institution is not approved. So you are not going to get the deduction. Is he correct in doing that? Absolutely wrong. It is not required that during the assessment year, at the time of claiming that deduction, the institution is approved. No, no, no. Approval is required at the time of making the donation. So did you make the donation during the previous year? Yes. At that time, was the institution approved? Yes. Later on, even if the approval is cancelled because of any reason, you will not deny the deduction. You will still get the deduction. Understanding? Because approval is required at the time of making the donation and not at the time of claiming the deduction. Because you are going to claim the deduction later on in the assessment year in your return. Might be at that time the approval is cancelled because that institution might not have satisfied any condition based on which the approval was granted. So based on certain condition, the approval was granted. If that institution has failed to satisfy that condition, the approval of that institution was cancelled. But it was cancelled after you made the donation. Bloody at the time when you made that donation, at that time it was approved, no? So the deduction cannot be denied. Deduction will still be available. Because the approval is required at the time of making the donation. So when you donated, at that time the institution was approved? Yes. You can very well claim the deduction. Later on, even if the institution remains approved or the approval is cancelled, will not make any difference. Because at the time when you made the donation, at that time the approval was there. Understood, sir? Should I move? Everyone, pay attention. Read this part. Now see, these section numbers, no, you are not supposed to remember these section numbers. Only you quote section 35. That is enough. You can quote only section 35. That is enough. Okay. So expenditure will be allowed and also the donations will be allowed. Now please pay attention. Very important thing. Any expenditure for scientific research, what did I say? Whether revenue or capital expenditure, is allowed as a deduction? Whether you follow 115 BSc or you don't follow 115 BSc will not make any difference. Expenditures will always be allowed as a deduction. Expenditure. What about that donations? Donations for scientific research, donations for statistical research, yes or no? Is it allowed as a deduction? Yes, only if you shift out. Only if you, but if you follow 115 BSc, if you are under the default tax regime, then the deduction under section 35 available for donations for scientific research will not be allowed as a deduction. Yes or no? So 115 BSc is followed, then deduction for donation will not be allowed. But if you don't follow 115 BSc, then deduction for donation will also be allowed as a deduction. Whether you follow 115 BSc or you don't follow 115 BSc, deduction for expenditure will always be allowed. There is no restriction on that. So two places you are supposed to be very careful. Number one, additional depreciation is not allowed if the assessee follows 115 BSc. Second place, under section 35, deduction for donations for scientific research etc. will not be allowed if you follow 115 BSc. At these two places you are supposed to be very careful. Okay? Will you remember? Should I move ahead? Perfect. See, this entire thing which I have discussed now is given in the notes. You just read them once, okay? This, everything I have done. Everything I have completed. Now let's come to the next section. Section 35. Section 35 AD. But before that, let's check any question is there or not. Illustration number 2 we have done, no? Illustration number 3 also we have done. Come to illustration number 4. Start. Come to illustration number 4. Start. Pay attention. Mr. Gamma, a proprietor, started a business of, first of all, he is starting a business of what? Manufacturing of tires and tubes. Okay, for motor vehicles. On what date he is starting the business? This year or last year? This year or last year? Last year he started the business on 1st of January 25. Okay. The manufacturing unit was set up on 1st May 2025. And he commenced his manufacturing operations on 1st June 25. 3 dates are given. Which is the relevant date? The business operations are commenced in this year on 1st of June 2025. So from this year onwards, the operations are commenced. Now to do this business, he has acquired what? Plant and machinery. So total cost of the plant and machinery installed in the unit is 120 crores. Can I say all the plant and machinery which is acquired in the new business are new plant and machinery only? And on that new plant and machinery, he will be eligible to claim additional depreciation also. Yes or no? But that plant and machinery should be eligible plant and machinery. So he is going to get normal depreciation also on the plant and machinery and additional depreciation also on the plant and machinery. Yes or no? So right now, I am assuming that on the entire 1,20,000 he is going to get normal as well as additional, because entire plant and machinery is new. But some new information is coming. But wait, before you charge normal as well as additional depreciation on entire 1,20,000, be very careful. They are giving you other information. What information? The said plant and machinery included in this 120 included second hand plant and machinery bought for out of 120, 20 crores second hand. On that I will not be able to claim, but normal I can claim on that. But on the balance 100, I can claim normal as well as additional. But wait, what they are saying? New plant and machinery for scientific research relating to the business of the assessee acquired at a cost of. Out of that 100, 15 is a new plant and machinery eligible for additional depreciation. But that was eligible for additional as well as normal. But that out of 100, 15 lakh rupees of machinery is used for scientific research. Don't you think that entire 15 I will have to claim under section 35? On that, no additional, no normal, no depreciation, because that is ineligible for additional depreciation or any type of depreciation. I have told you that the asset whose cost is allowed under section 35, you cannot claim depreciation on that asset and you cannot claim the cost of that asset under any other section. Simple. Now I have the breakup of 120. Out of 120, 20 is second hand. On that, normal will be calculated, additional will not be there. Remaining 100, 15 lakh will be fully allowed under section 35. On that, there will be no additional depreciation, no normal depreciation. What about the balance 85? That is a new plant and machinery so far, eligible also. On that, additional will also come, normal will also come. Yes or no? Now what they are saying, compute the amount of depreciation allowable under section 32 in respect of assessment year 26-27. Assume that all the assets were purchased by way of, thank God, entire actual cost will be allowed as a deduction in the form of depreciation or under section 35. Why? Because entire actual cost, all the assets are acquired by account pay check only. And Mr. Gamma has exercised the option of, thank God, additional depreciation will also be allowed. And section 35 anyways allowed. for expenditure. Whether I follow 115 BSc or I don't follow 115 BSc. Section 35, expenditure will always be allowed, whether revenue or capital expenditure. Yes or no? Now, how will you present this? Come on, tell me. Tell me. So, presentation will be like this. Total cost of what? Plant and machinery. 120 lakhs. 120 lakhs, I'll write like this. 120 lakhs. Meaning 1 crore 20 lakhs. Out of this, 15 lakhs is the plant and machinery which is used for scientific research. Yes or no? So, plant and machinery used in business for what? Scientific research is how much? 15 lakhs only, no? So this 15 lakhs allowed under section 35, and on this no depreciation is available. So your total deduction under section 35 will be 15 lakhs. So how come 15? 15 crores. Okay, 120 crores and 50. Oh, my mistake, huh? Sorry. 120 crores, no? 120 crores. And out of 120 crores, this is 15 crores, no? 15 crores. Now it is okay, sir? Now it is okay? Very good. Now see, can I say the plant and machinery used in business in normal operations? Normal operations, meaning this plant and machinery is not used for scientific research. This is used for normal operations. Normal operations means manufacturing. Yes or no? How much is that? Out of 120, reduce 150. Sorry, 15. You will get 105 crores. Now this 105 crores is eligible for depreciation. I will claim depreciation on this. But will I claim additional normal both? Yes, I can claim. But out of this, sum is second hand. On that I will claim only normal. I cannot claim additional. So out of this, how much was second hand? Come on, tell me. Second hand plant and machinery was 20 crores. Yes or no? On that, I will claim normal depreciation. At the rate of 15% is equal to how much? 3 crores. 3 crores, no? 3 crores. And on this, I will claim additional depreciation at the rate of 20%. Then sir will come in the exam and sir will kill us. Nil. No additional depreciation. Why? Because the machine was okay. Very good. Then on remaining remaining plant and machinery, which is new plant and machinery and eligible. How much is remaining now? Tell me. 8 crore 50 lakhs, no? Sorry. 85 crores. 85 crores. Now on this, will you claim normal depreciation at what rate? 15%, amounting to why half? Why half? Tell me. Where did you see that the plant and machinery is acquired in this year and put to use for less than 180 days? Is it written anywhere? Then why half? Hello? Normal depreciation, additional depreciation will be allowed fully. Because nowhere it is written that asset is purchased and put to use for less than 180 days. You can see the dates also. The business is commenced on 1st of June 25, meaning that the assets are acquired on this date or prior to this date. And no assets are acquired and put to use for less than 180 days. So why to claim half depreciation? The depreciation will be full rate only. Yes or no? God knows what are you going to do in the exam. Yo, tell me how much? 12 crore 75 lakhs. Yes or no? Please pardon me for zeros and all, huh? If you find any mistake, just inform me. So now tell me. Now additional you are going to get. Additional depreciation. At what rate? 20%. 20% on that will be how much? 17 crores. Okay, sir. So tell me, the question is asking you total deduction for depreciation. Therefore, depreciation under section 32 will be how much? You will under section 32, the depreciation will be normal depreciation as well as additional depreciation. So normal depreciation is equal to 3 crores plus 12 crore 75 lakhs is equal to 15 crore 75 lakhs. Yes or no? And additional depreciation will be nil plus 17 crores will be how much? 17 crores. So the total depreciation available is how much? 32 crores 75 lakhs. Done, sir? This is the one answer which they want from you. And second answer, therefore, deduction under section 35 is equal to 15 crores. 15 only, no? You will get full 4 marks to do this. Just tell me what was there in this question. Reading the question 10 times, again and again, doing the same things. Apply some mind, nah? You all are not only BCom students. You are students of Chartered Accountancy course. You have to be smart. These type of questions do come in the exam. Case scenario. 2 marks, 4 marks MCQs. Or the same question will be there, they will just change the amounts and they will include one or two more details. That's it. But the question can be framed like this. Understood? Should I move ahead? Yes or no? Yes, sir. Now let's come to section 35 AD. One of the most important sections again. So 32, 35 and then 35 AD. 35 AD talks about, this section talks about deduction. A special type of deduction will be given. What deduction, you know? Entire capital expenditure on your assets will be allowed as a deduction. If you are in the specified business. Which business? So there are 15 businesses. How many businesses? The names of these 15 businesses specified. If you are doing any of these businesses, so in any of these businesses, whatever assets you acquire, no need to claim depreciation. Cost of all the assets fully allowed as a deduction. No need to beg. Give us the deduction for cost and then we will allow small amounts, depreciation. No. You all are special people because you are doing a specified business. You are helping the government in many ways. Because of you doing such type of business, rural infrastructure is developing, transportation is getting efficient. Okay, because of you people doing such type of business, lot many other benefits are happening to the economy, to the government. So the government is going to give you some incentive. And what incentive is that? Unlike other businessmen, will not tell you to beg in front of us. That give us the deduction of cost, give us the deduction of cost. We give the deduction of cost to others in small part in the form of depreciation. You claim that entire cost at one go in the form of deduction under section 35 AD. But this deduction will not be available to every assessee doing any type of business. This will be available only to those assessees doing those businesses which we are specifying under section 35 AD. So how many businesses are there? 15 businesses are there. So first of all, we'll have to check the names of all the businesses and we'll have to by heart those names. We'll have to remember those names. Okay. Names are easy, don't worry. You'll remember also. Okay. So first of all, let's go and check which type of businesses are there. Which type of businesses are there? Section 35, one more question is there that we are going to see later on. Don't worry. Just remind me, illustration number 5 is pending. Okay, no? So just after this explanation of 35 AD, we are going to do the question on 35 AD also and that one question of section 35. That also we are going to do. Okay, no? Now see, what they are saying? List of. Okay. Now, first business, setting up and operating what? Cold chain facilities. Setting up and operating warehousing facility for storing of agricultural produce, and one more is there, setting up and operating warehousing facility for storage of sugar. So two warehousing businesses are there. One is cold chain facility. So you set up and operate cold chain facilities. So you are in the business of setting up and operating cold chain facility. So your business is running the cold chain facility, or you are in a warehousing business. What are you warehousing? Warehousing of agricultural produce or warehousing of sugar. That's it. Warehousing of any other item will be your normal business. But warehousing of sugar and warehousing of agricultural produce will be your specified business. So you set up and you operate a warehouse for storage of agricultural produce or storage of sugar. Or you set up and operate a cold chain facility. Or you can do this business, laying and operating a cross country. Cross country, huh? You are laying and you are operating a cross country natural gas or crude or petroleum oil pipeline network for distribution, including storage facilities, being integral part of such network. So for the distribution and storage of, what? Natural gas, crude oil, petroleum oil, you are laying and operating a cross-country pipeline network. So you are laying and operating a cross-country pipeline network. This is your business. And through this pipeline, what will happen? Through this pipeline, what will happen? It will be for transportation of what? Natural gas, crude oil or petroleum oil, including storage of that particular natural gas, crude oil or petroleum oil. Yes or no? Or build and operate a hotel for 2-star or above category. So you are in a hotel business. So build meaning construct and operate a hotel, but that hotel should be 2-star or above category. Or build and operate a hospital anywhere in India with at least 100 beds per patient. So hospital having how many beds? Minimum 100 beds or more. Build and operate that hospital. Or develop and build any housing project under the notified scheme for slum redevelopment or rehabilitation. So you are undertaking projects, construction projects under slum redevelopment schemes of the government. Yes or no? So you are in the construction business. What type of construction projects you are taking? What type of construction projects you are undertaking? Slum redevelopment and rehabilitation projects you are taking. Any construction business is a normal business, but if you are into this type of construction business, then you are doing a specified business. Okay. Next one, developing and building a housing project. Again, a housing project under a notified scheme for affordable housing. Have you heard about Pradhan Mantri Awas Yojana? So if you are a builder, constructing cheap houses so that others can afford as per the scheme of the government under the Pradhan Mantri Awas Yojana and all. So you are into the construction business. But what type of construction, what type of projects you are undertaking? You are undertaking slum redevelopment projects. You are undertaking affordable housing projects. Then your construction business will be treated as which business? Specified business. Any other construction business is a normal business, not eligible for section 35AD. Yes or no? Now, production of fertilizer in India, setting up and operating an inland container depot or container freight stations. These are the areas, notified areas where the containers are kept after they are imported or before they are export. So the containers are kept at particular huge lands which are nearby the ports. So there is a port, nearby a port, a huge land you are buying, and on that you are operating this container freight station. You are operating inland container depot where the containers are, where the containers are kept before they are export and after they are imported. So you are doing this type of business. You are setting up and operating a inland container depot, ICD, or container freight station, CFS. Okay. Now you are in the business of beekeeping and production of honey and bee wax. Then you are setting up and operating a warehousing facility for storage of sugar. You are laying and operating a slurry pipeline network for transportation of iron ore. Then you are setting up and operating a semiconductor wafer fabrication manufacturing unit, if such unit is notified by the board in accordance with the prescribed. Meaning wafer fabrication means what? See, any type of electrical equipment you will see now. Any type of electrical equipment. If you will open this now, there will be a green color motherboard will be there. Circuit board. So you are manufacturing this. That circuit board. That is known as semiconductor wafer. Any type of electrical equipment you see that green color board. That is a semiconductor board. And when you put two sheets and in between some metal and some things are, they are electrical circuits is there, on that two sheets are joined and they are formed as a wafer. So that is why this is known as semiconductor wafer fabrication manufacturing unit. So you are manufacturing these kind of motherboards, these kind of circuits, semiconductor circuits and all. Okay. Mobile phones, if you will see, in the mobile phones also you will find these kind of circuits. In the camera, in this mouse, in this keyboard, in this what do you will say, computer, monitor, in this projector, everywhere, even in the speakers, everywhere you will see that green color circuit board. That is a semiconductor wafer. And you are having a manufacturing unit for that. Understanding? So all these businesses are specified business. But last one, developing or maintaining and operating, or developing, maintaining and operating a new infrastructural facility. So either you are developing a new infrastructural facility or you are maintaining and operating a new infrastructural facility, or you are developing, maintaining and operating a new infrastructural facility. Meaning metro, bridges, roads, dams are what? Infrastructural facilities. So either you are developing them, or you are maintaining and operating them, or you are developing, operating and maintaining them. You are into that business. Okay. So if you do any of these businesses, don't you think in these businesses heavy capital expenditures are required? Meaning heavy investment in assets. These are capital intensive businesses. Now to do these kind of businesses, to start these kind of businesses, you will have to first put a lot of money in buying the assets for these businesses. And on top of that, these businesses usually take time for their activities to be commenced. First, put so much of money. Second, when you will start these businesses will also take longer time to commence the operations. Yes or no? And after the operations are commenced, you start getting some money from the business. So usually what happens, if for these businesses assets are acquired, heavy investment in assets is happening, and that heavy investment will be allowed to you as a deduction after long time when the business is commenced. And that too also in small parts. Would you like it? Would you be motivated to start these kind of businesses? No. So the government wants the assessees to start doing all these type of businesses. So that if you will do all these businesses, what will happen? It will ultimately help the government to develop rural infrastructure, transportation of some items in more efficient ways. Yes or no? These are the areas which will improve in the economy. Ultimately, it is going to help the economy to grow. But the economy will grow only if assessees are coming forward and doing these kind of business, which the assessees are not doing as of now. Why? Because these type of business are capital intensive business. You put a lot of money in this before commencement, and commencement also takes time. After the commencement, the cost will be allowed in small part in the form of depreciation. Such a huge cost I am incurring on assets to start these businesses. Commencement also takes time, 5 years, 10 years. After 5 to 10 years, the business operations will be commenced, and after that, if I start earning what? Income, and from that income, the entire cost which I have already incurred, such a huge cost, you are going to allow in the form of depreciation in small parts. So what is the use of doing these kind of businesses? Let us do other businesses also. Let us do other businesses only. Understanding? So assessees were not showing interest in doing these kind of businesses, but the government wanted them to do these type of businesses, because government wants to promote these businesses in order to give boost to the economy. Hence, Section 35 AD was introduced. And as per Section 35 AD, government says that any capital expenditure, meaning any asset which you acquire for setting up this business, before the commencement also and even after the commencement also, whatever assets you are going to buy for these businesses, entire cost of that asset we are going to allow straight away at one go. No need to claim like beggars in the form of depreciation. Full cost we are going to allow. So Section 35 AD will allow you the deduction. Deduction for capital expenditure, meaning cost of assets which you have incurred for these businesses. Fully allowed at one go in the year in which the expenditure is incurred. But if such expenditures are incurred prior to commencement of business, prior to commencement means within how much time? No, at any time. That 3 years requirement is only in the case of capital expenditure in scientific research. Here, at any time prior to commencement, what did I say? At any time prior to commencement, whatever capital expenditure was incurred, all that capital expenditure we can allow under Section 35 AD in the year in which the business is commenced, provided those capital expenditures are capitalized in your books in the year of commencement. Yes or no? So, first of all, tell me, will you remember the names of these businesses? Will you remember? You will have to read this list at least 4 to 5 times. Have some coding system, whatever you want, but you have to remember the names of all of this business properly, I am telling you. They are not going to help you in the exam. They are not going to tell you on their own that, see, listen, this business is what? Specified business. No, they are not going to tell you. At least 15, name of these 15 business, you can remember. At least the institute can expect this much memory from you. Hello? So these 15 businesses, names you will remember? Sure, sir? Now see, are you an assessee? Tell me yes or no. Assessee can be any person. Now any person is engaged. Engaged means commenced. Commenced. Commenced what? Operations. Commenced operations of any specified business. How many businesses are there? 15 businesses are specified. Any of these business, the operations are to be commenced. Meaning what? Start new businesses. You have to commence the operations, means the government wants you to start the new operations, meaning you will set up new businesses, and the operations are to be commenced. Operations are to be on or after specified dates. Now what are these specified dates? You are not supposed to remember. Why? Because for some businesses the date specified is on or after 1st April 2007. For some businesses it is on or after 1st April 2009. For some businesses on or after 1st April 2010. For some businesses it is 1st April 2012. For some businesses it is on or after 1st April 2017. So if you are commencing the operations in 25-26, meaning you are commencing the operations on or after 1st April 2007 only, on or after 1st April 2008 only, on or after 1st April 2009 only. Yes or no? So date of commencement of operations is given, meaning on or after this date you have to start these businesses. You have to commence the operations of these businesses. What if the operations were already commenced prior to these dates? We want you to commence the operations on or after this date, then only the specified business, the benefit of section 35AD will be available. But you had already commenced the operations prior to the specified date, then even though the business is a specified business, you will not be eligible to claim 35AD deduction, because 35AD deduction we want to give you only for these businesses if the operations are commenced for these businesses on or after the dates which we are specifying. And the dates are 1st April 2007, 1st April 2009, 1st April 2010, 1st April 2012. For certain businesses it is 1st April 2017. So on or after these dates, yes or no? Meaning if I am commencing operations of any of these businesses in 2025-26, meaning I have commenced the operations on or after the specified date only. Yes or no? Hello? But what if the operations of these businesses are commenced prior to the date specified? Then business is a specified business, but not eligible for deduction under section 35AD. Why? Because to get the deduction under section 35AD, the operations must be commenced on or after the date specified, but you have commenced the operations prior to that. So for this business, we are not going to give you any deduction under section 35AD. Understanding? So, are you an assessee? You have commenced the operations on or after the specified dates. On or after the, which are the dates specified? For certain businesses it is 1st April 2007. For certain businesses it is 1st April 2009. For certain businesses it is 1st April 2010. For certain businesses it is 1st April 2012. For certain businesses it is 1st April 2017. Now these dates they have deliberately not given you. Why? Because not required only. But they can tell you that the operations were commenced prior to specified dates. Then even though the business is a specified business, for that business, deduction under 35AD will not be available. Deduction will be available only if any of these businesses are there. For these businesses, a date will be specified. On or after this date, the operations of this business are to be commenced. Understanding? Now, when you have commenced the operation of this specified business, so in this specified business, you will incur what? Capital expenditure is incurred. Capital expenditure is incurred means what? Actual cost of assets. Okay, no? Which assets? Which assets? Goodwill, then land or any financial instrument other than these assets, any other assets. Meaning Plant and machinery can be there? Yes. Furniture can be there? Yes. Building can be there? Yes. Any asset can be there which you can buy for this business other than land, goodwill and financial instruments. Other than land, goodwill and financial instruments. So you have to incur the actual cost on what? Assets. You have to incur the actual cost on assets. Which assets? Which assets? Any asset. Any asset other than land, goodwill or financial instrument. For any asset, actual cost is incurred, meaning capital expenditure is incurred. That capital expenditure incurred pre-commencement also, and that can be incurred post-commencement also. Pre-commencement within 3 years immediately preceding to commencement. No, this 3 years time limit is not available here, not to be checked here. Pre-commencement means any time before what? Commencement. So any capital expenditure incurred prior to commencement will be fully allowed. Fully allowed under section 35 AD. Under section 35 AD, in which previous year? In the previous year in which? In the previous year in which business is commenced, provided such capital expenditure is capitalized in the books in the year in which the business is commenced. That year's balance sheet should show these type of assets. Yes or no? So in the balance sheet of the first year, have you shown these assets? Yes. Claim the cost of these assets as a deduction in the year of commencement itself. Understanding? But what if after commencement also you will incur the capital expenditure on this business? Then even that will be fully allowed under section 35 AD in the previous year in which such expenditure is incurred. The year in which the expenditure is incurred, in that year the full expenditure will be allowed as a deduction. This is section 35 AD. Will you remember this? But now with section 35 AD, few important discussion is attached. Very first thing, if you want to claim this deduction, there are some additional conditions which you will have to fulfill. What did I say? If you want to claim this deduction, no, there are certain extra conditions which we are putting. First condition is the business operations of the business must be commenced. The operations of the business must be commenced on or after the prescribed date. The business must be a specified business. Number one, operations of the business must be commenced on or after specified dates. So first condition is, come on, tell me. First condition is business is a specified business. Second condition is operations are commenced on or after specified dates. Now other conditions also I am telling you, if all those conditions are also fulfilled, only then you are going to claim this capital expenditure as what? Deduction. Only then this section 35 AD deduction will be allowed like this. So what are the other conditions which you will have to satisfy to get the deduction like this? Understanding? Number one. Meaning the third condition. The books of accounts and, sorry, color, red color, my mistake, huh? Books of accounts and documents, and what? Documents of such specified business must be separately maintained and audited also. So you are having three businesses. One is your garment manufacturing business. Second is your warehousing business of sugar. Third is your trading business. Out of three business, warehousing of sugar is a specified business. So the books and accounts of this business, specified business, should be separately maintained. And they must be audited also. Because for this business, you are going to claim Section 35AD deduction, which is a huge deduction. And we also will check, no, that what is the income of this business, what type of capital expenditure you are incurring, whether you are capitalizing those capital expenditure or not. We would require your books of accounts, which we can ask anytime. And those books should be authentic, genuine. The books should not be manipulated. So how it will be proved that the books which are separately maintained for this business are not manipulated, are genuine? If some person, respectful person, audits, so it must be audited by a chartered accountant. And the books must be maintained separately, because at any time in future we can ask you the books of these accounts to check whether the income of this business is properly calculated or not, whether the deduction, such a huge amount, is claimed properly or not. So for that we would require your books. And the books which we are asking from you should be genuine and should be reliable, are not manipulated. For that, get the books of accounts of this business audited also. This is condition. Now, next condition, if deduction under section 10AA or 80IA to 80IE are 80IA to IE instead of that, or Part C deductions of chapter 6A, which are given in 80IA to 80IE. Yes or no? If deduction under section 10AA or Part C deductions of chapter 6A is claimed for such business, is claimed? No, is not claimed. Is not claimed for such business. Only then you can claim 35AD. So for that business, you are eligible to claim 10AA deduction also. So any specified business is there, for that business you can claim 10AA deduction also. And you have claimed that 10AA deduction for that business, then you are not going to get 35AD. Or for that business, if you are eligible to claim Part C deductions of chapter 6A, starting from 80IA to 80IE, those deductions are known as Part C deductions of chapter 6A. And for that business, if these deductions were available, you have claimed Part C deductions of chapter 6A for that business, then also you are not going to get 35AD. If you want to claim 35AD, you will have to leave 10AA. If you want to claim 35AD, you will have to leave Part C deduction. You cannot take both the benefits for the specified business. Either you claim 10AA benefit, then forget the benefit of 35AD. Or you claim ATIA to ATIE benefit, then forget 35 AD. But if you want to claim 35 AD, remember you cannot claim 10 AA deduction for that business, or for that business if Part C deduction was available, Part C deduction of Chapter 6A was not claimed for this business, only then you are going to claim 35 AD deduction for this business. Yes or no? Understood? Next one. Point 5. Operations. What did I say? Operations of such business are commenced by installing what? New plant and machinery. So whenever you will commence the operations of this business and you want that for this business 35 AD deduction should be available to you, you will be eligible to claim 35 AD deduction for this business if you commence the operations of the business by installing new plant and machinery in the business. So whatever plant and machinery you are installing in this business, entire plant and machinery to commence the operations of the business must be new plant and machinery. Second hand plant and machinery not allowed. But then the assessee will come and fight. How it is possible to install the entire new plant and machinery? Some second hand will be there. Give some relaxation. Okay. So we are giving you relaxation. Maximum 20% of the investment in the total plant and machinery can be second hand. Not more than that. Meaning, if the total investment in the plant and machinery to commence the operation was 100 crores. How much? Then 20 crores can be second hand. Maximum. Not more than that. If you have invested 100 crores in the plant and machinery, I am talking about all assets or only plant and machinery. Other assets you do anything, what you want. But if you will commence the operations of these business by installing plant and machinery, so at the time of commencement, whatever plant and machinery you have installed in the business must be new plant and machinery. For example, the total plant and machinery with which the business operations have started, the cost of that plant and machinery was 100 crores. How much? Out of that, 40 crores plant and machinery was second hand. Is it more than 20%? Is it more than 20% of the total investment? How much was the total investment? 100. Out of that, maximum 20 crores should be second hand. But how much second hand you have installed in the business? 40 crores, which is more than 20%. For this business, you are not eligible to claim 35AD deduction. Forget about 35AD. Bye-bye. Because you have installed second hand plant and machinery for a value which is more than 20% of the total investment in plant and machinery. But wait, if any second hand plant and machinery you have installed, but that was imported, meaning that second hand plant and machinery is not purchased from India, it is purchased from outside India, and for that no deduction under Income Tax Act was given to any other person, then that second hand plant and machinery will be considered as good as new plant and machinery. That will not be treated as second hand plant and machinery. Now let's take one example. Operations of such business must be commenced by installing new plant and machinery. Maximum investment in second hand plant and machinery is equal to 20% of total investment in plant and machinery. This is one point you are supposed to remember. And the second point is imported second hand plant and machinery, which is imported plus no deduction of cost of such plant and machinery was given to any other person under the Income Tax Act. So first of all, that second-hand plant and machinery should not be purchased from India. It must be imported. It must be. And second, for that second-hand plant and machinery, the cost of that second-hand plant and machinery was never allowed to any other person under the Income Tax Act. Then that second-hand plant and machinery will not be treated as second-hand, but it will be treated as new plant and machinery only. Yes or no? Now let's take one example. Should I? See, this is when you commence the business and you tell the government that government, I am eligible for 35AD deduction. Your eligibility condition is this. So when you commence your business, we want you to commence your business by installing what? New plant and machinery. Full plant and machinery installed to commence the business should be new. But maximum second hand is allowed, maximum 20% of total investment in plant and machinery. But out of that second hand plant and machinery, if some second hand plant and machinery is imported, and for that the cost is not allowed to any other person under the Income Tax Act, then that second hand will not be treated as second hand, it will be treated as if it is new only. Understanding? So tell me, total investment in plant and machinery to commence the business was 100 CR. How much? Out of that, second hand plant and machinery is 40 CR. How much is this? 40 CR. And new is how much? 60 CR. Only this much information is given. Tell me whether the assessee will be eligible for 35AD deduction or not. No 35AD deduction in this case. Everyone understood? Same case. But some information is given. Some more information. Out of the second hand, some was imported and some was purchased within India. So the purchase within India was 30 crores and imported was 10 crore. Imported is as good as new, and this is also new. Check this. Is it more than 20 crores? Here also it was more than 20 crores. Hence 35AD deduction is not available. Now here you are not supposed to check 40. You are supposed to leave imported second hand. Yes or no? Check only this 30 crores. Because this is non-imported second hand. Okay, no? So tell me, is it still more than 20 CR? Yes or no? So here also 35AD deduction will not be available. Understanding? Same information. Same information. Copy and then paste. Now what I will change? This will become 30 and this will become 10. This will become 30 and this will become 10. Now see. Will you check this 30? No. You are supposed to check this 10 crores only. Is this 10 crore more than 20 crores? Or less than or equal to 20 crores? Then for this business, you are very well eligible to claim 35AD deduction. Yes or no, sir? So don't count second hand imported as a second hand. Only count non-imported second hand. and this amount should not be more than 20% of total investment in new plant and machinery. Total investment in plant and machinery, yes or no? So if this amount is up to 20 crores or less than that, up to 20% or less than that, then you are eligible for 35AD deduction. But if this amount is more than 20%, then you are not eligible for deduction under section 35AD. Will you remember this? Sure. This is another condition. This is another condition, sir. Now, how many conditions we have written? 5 conditions. First condition, come on, tell me, first condition. You must be doing a specified business. You must be doing a specified business. You have to start that operations of the, you have to commence the operations of this specified business on or after specified date. Then you are eligible to claim this deduction. No. Then also you are not eligible to claim this deduction. More conditions you have to satisfy. Next condition is books of accounts and documents of that business must be separately maintained and must be audited. Then one more condition. If you are eligible to claim 10AA deduction for the same business, forget 10AA. Only then you are eligible to claim 35AD. If you are eligible to claim Part C deduction of Chapter 6A for that same business, forget Part C deductions of Chapter 6A. Then only you are going to get 35AD. And next one, the operations of that business which you have commenced must be commenced by installing new plant and machinery. But out of the total investment in the plant and machinery, 20% or less of the total investment is second hand, then it is okay. But second hand, imported will not be treated as second hand. It will be as good as new. Understanding? One more condition. Last condition. Condition number 6. Such business, what did I say? Shall not be formed by splitting up or reconstruction of business already in existence. So you have to start fresh operations. We are telling you to commence the operations, and bloody what are you doing? Already existing business was there. You have split that business. You have reconstructed that business and started this business. Trying to say that this is a new operations. No. Already existing operations were there. You are just converting it into new business and saying that you are commencing new operations. You are not going to get any deduction. If the operations, if the business is formed by splitting up or reconstruction of business already in existence. Now I'll give you one example. Okay. See, if you see hotel business is there. Hotel business is a specified business, no? So out of 15 businesses, let's take the example of hotel business. You have to build and operate. You have to construct and operate. Which business? Hotel business. Having 2-star or above category. But that business operations must be commenced on or after a specified date. And I'll tell you the date for that business is 1st April 2010. What is the date? Though it is not given, but I remember that date. Okay, no? So, see, there is one company whose name is X Limited. One company. Instead of X Limited, let's take an example of ITC Limited. ITC is in which business? Hotel business. So ITC has multiple hotels in multiple cities. In Bangalore, ITC hotel business is there, ITC hotel is there. In Mumbai, ITC hotel is there. Yes or no? In Chennai, ITC hotel is there. Everywhere in big cities, no, you will see ITC hotels. Okay, no? So ITC Limited is a company. ITC Limited is a company engaged in which business? Hotel business. Now ITC has, for example, 3 hotels. Hotel 1, this is first business, which is in Bangalore. Hotel 2, this is the second business, this is in Chennai. And Hotel 3, this is the third business, this is in Mumbai. So one is Bangalore hotel business, another one is Chennai hotel business, and third one is Mumbai. So ITC already has 3 running businesses. Now, the Bangalore hotel was started in 1995. Operations of Chennai hotel already started in 2000. And Mumbai hotel operations was started in 2007. Don't you think that these hotels, the operations are already commenced prior to the date specified? None of the business is eligible for 35AD deduction. Why? Why? Because the operations of this specified business is not commenced on or after 1st April 2010. They have already commenced. For these businesses, 35AD deduction cannot be claimed. If ITC wants to claim a deduction under section 35AD, so it has to start a new hotel business. So for example, in 2011, 2017 and 2022, ITC started Hotel 4, Hotel 5 and Hotel 6. Yes or no? One was started in Ahmedabad, another was started in Pune, and one was started in Hyderabad. Possible or not? Now don't you think all these hotel businesses are 2-star or above category? All are specified business, and the operations of all the hotels are commenced on or after 1st April 2010. Provided all other conditions are also fulfilled, 35AD deduction can be claimed for these businesses. But the 35AD deduction cannot be claimed for these hotel businesses because their operations were already started earlier. Yes or no? Everyone understanding? Now let's take an example that these hotels, already 3 hotels are there, ITC Limited. Now what happened? No, a new company is formed. In the year 2025, this year, a new company was formed and the name of the company was CTI Limited. ITC, no, CTI Limited. New company is formed. And since this Mumbai business and since this Chennai business were very profitable business, no? Okay. And this company wanted to take higher deductions for these 2 businesses. What this company did, you know? This company formed a new company. And these 2 businesses were transferred. Demerger happened. And now these 2 businesses, starting from 2025, 26, now Hotel 2 and Hotel 3 operations are continued by new company. Now my question is, can this new company claim 35AD deduction for these 2 hotels? Yes or no? Why no? Because the business of the company is formed by splitting up the already existing business. Understanding or not? Bloody, have you started new operations? Or already the operations which have started are continued by you? So how the bloody hell you are coming to us to claim section 35AD deduction for these businesses? We would not have given the deduction for these businesses to ITC Limited. How the hell you are going to claim the deduction for these businesses from us just by saying that since you were formed in 2025-26, meaning on or after 1st April 2010, that does not mean that the business which you have started doing, the operations are also commenced in 25-26. Their operation have already started earlier. And the business which you are doing is formed by splitting up the already existing business. For this, you cannot claim section 35AD deduction. Yes or no? This is known as splitting up. Now what is reconstruction? Two companies are there. ITC Limited has how many hotels? Come on, tell me. 3 hotels. H1, H2, H3. Okay, no? This business was started in 95, 2000 and 2007. This is Bangalore, this is Chennai, this is Mumbai. Okay. One more company is there. The company is, name of the company is Lemon Tree Limited. Lemon Tree hotels are also there. Okay, no? So, Lemon Tree Limited. Now, Lemon Tree Limited has 2 hotels. Hotel number 1, hotel number 2. This hotel is in Hyderabad and this is in Madurai. Possible or not? This hotel was started in 2006. This hotel was started in 2009. Now, they also cannot claim 35AD. For all these, 35AD is not available. So what these 2 companies did, you know? New company formed. ITC Lemon Limited. New company is formed. Okay. Now what is happening? All these hotels are transferred on the name of ITC Lemon Limited. Now ITC Lemon Limited is doing H1, H2, H3. These businesses of ITC are also done on the name of ITC Lemon Limited, and H1 and H2. These 2 businesses of Lemon Tree Limited, yes or no, are also done by ITC Lemon, new company. This is known as reconstruction. Now tell me, can ITC Lemon Limited, can it claim deduction under section 35AD for these hotels? No. Even if it was formed in 2025-26, company is formed in 25-26, but the company is formed, the business of the company is formed by reconstruction of businesses already in existence. Understood? So, for this business which is formed by reconstituting the businesses already in existence, for these businesses also you cannot claim what? 35AD deduction. You have to commence new operations. Now what if ITC Lemon Limited, this new company, has started another hotel, hotel number 6, H6, and the operations are commenced in 25-26. Then for this hotel, very well, deduction under section 35AD can be claimed, because this business is not formed by reconstruction or splitting up of business already in existence. The new operations have been commenced. Understanding? Sure. So this condition you have to remember. 6th condition, last condition. Okay, sir? Should I move ahead? Perfect. See, read. This entire thing I have explained, this pre and post. Now, if you satisfy all the 6 conditions, what will happen? You will get a 35AD deduction. Now, what 35AD deduction you will get? Any capital expenditure which you have incurred other than cost of land, cost of goodwill, and cost of financial instruments. Any other capital expenditure you have incurred, meaning any other asset you have acquired, the entire actual cost of that asset will be allowed as a deduction in the year in which it is incurred. But wait, if that capital expenditure was incurred prior to the commencement of business, when? At any time prior to the commencement of business. Even that pre-commencement expenditure, capital expenditure will also be allowed in the year in which the business is commenced, provided that capital expenditure is capitalized in the books of the previous year in which the business is commenced. Done, sir? Sure, sir? So, are you claiming the capital expenditure under 35AD? Are you claiming capital expenditure, cost of the asset under section 35AD? That cost you will not claim in the form of depreciation. Number 1. That cost cannot be allowed under any other provision. Sure, sir? And proviso to section 43(1) will also become applicable. Any capital expenditure, any actual cost paid in a day, amount is more than 10,000 other than prescribed mode, then that payment will not be treated as actual cost. Ignore. For that, you will not get any deduction under 35D because that payment itself will not be treated as actual cost. Ignore that actual cost. That you cannot claim under 35AD. So, 2 important things. Will you remember? First thing, what? Proviso to section 43(1) applicable on this capital expenditure? Yes or no? And second one, the capital expenditure which you are claiming here cannot be claimed under any other provision. And also, no depreciation on this capital expenditure will be separately allowed because this entire capital expenditure we are allowing under this section. Sure, sir? Easy, difficult? It is made easy. Okay. See, I have already written such capital expenditure which is allowed under 35D cannot be claimed in the form of depreciation, is not allowed under other provision. Deduction under section 35D in respect of capital expenditure only if 10AA is not claimed, 80IA to RRB not claimed. Proviso to 43(1) applicable or not applicable? Applicable. Books of accounts to be maintained separately and audited. Such business shall not be formed by splitting up or reconstruction of any business already in existence. That is, the operations of such business shall commence afresh. Okay. And next one, operations of such business shall commence by installing new plant and machinery. Second-hand plant and machinery is allowed? Yes, can be installed, but maximum 20% of total investment in plant and machinery. If the second-hand plant and machinery is acquired from outside India, meaning imported, it will be considered as if it is new, provided the cost of that second-hand plant and machinery was not allowed under the Income Tax Act to any other person. Understanding? Now this very important discussion is there, which I am going to do after the break. Okay, so take a small break only, no? 1 hour. Okay, after 1 hour we are going to meet and we are going to finish 35AD and other sections also. Okay.